What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw more high volume selling across the board as the stock market continues to go into a deeper correction. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down 1.11% and we did close down below 450. So remember I told you below 450 it's more than likely we're going to try to come down here to fill these gaps. And we did fill one of those gaps, which was at 447. So now that we're starting to fill gaps, it looks more and more likely, like my theory was correct, that below 450 we are trending down towards 436. Now don't just assume we have to go down there in a straight line, even though it is possible. I always tell you to look out for these counter trend rallies, which means we could be coming all the way back up to our resistance trend line, which is right around 462. So if you start to see a counter trend rally that gets up to 462, don't start getting bullish because we could still get rejected from there and still come down here to close this gap at 436. Now, if we do get that bullish breakout look, you're going to see a breakout above 462 and eventually price action breaking back above 472. This would be your bullish scenario and this would be the all clear that we're going back into a bull market. But I will warn you that you should be favoring more downside because the trend is your friend and we clearly broke the macro level bull trend line. I've been talking about that macro level trend line for quite a long time and you can clearly see we broke down through that level. So this increase in selling is strictly just people exiting because they can also see the same thing that we see and they see that price action is breaking through the macro level bull support trend line. This is completely normal price action and this is to be expected, and that's exactly why I was telling you to pay attention to that very critical support level. So the fact that SPY broke down through that support level means that we're more than likely going to be in a downtrend until we can see a bullish breakout. So like I continue to tell you, the bullish breakout will be above our resistance trend line above 462 and confirmation will be a breakout back above 472. Now to the downside, you're looking for support down here right around 444, the gap close right around 442, and then we'll have support at 440, our support trend line at 438, and the full gap close at 436. Those are going to be all of your support levels, but there's no guarantee that we have to continue to go lower. You can see we're well below the lower Bollinger Band, so there's a very good chance we get a very impulsive rally from here. I'm just trying to warn you to not trust that rally until you get the confirmation of the bullish breakout. So while there is a lot of upside potential in the short term, there's still going to be the possibility that it's just another lower high and we continue to trend down lower to finish out the rest of the month. So typically speaking, these corrections last the full month and possibly go even longer. So just don't get bull trapped just because we start to bounce. If you're a great trader and you know your risk management and you know your risk and reward, these are great times to start getting very aggressive and start trading. But just make sure you know exactly what you're doing and you know your entry and exit strategy no matter what the market does from here. If you got too over leveraged during this correction and you weren't prepared for the breakdown through support, you really need to reevaluate that you don't have a trading plan. If you're getting caught off guard in this market, you more than likely weren't prepared for all scenarios. And I can't stress it enough that this is going to be a very difficult trading year and you need to be prepared for absolutely every single scenario the market's going to throw at you. The market is typically very difficult to trade and that's why most traders are not profitable, and you really need to make sure you know exactly what you're doing no matter what the market does from here. So in that example, you should know how you're trading this market if we go back up to new all-time highs, and you should know how you're trading this market if we get rejected at resistance and go into a bear market. If you're not prepared for both of these scenarios, then you are not going to be a profitable trader because your trading strategy cannot depend on the market only going in one direction. If you're only planning on the market going in one direction, then you're just an investor and you should continue to dollar cost average into the market and let time solve all of your problems because long term we know the market is more likely going to continue to go higher. But as a trader, make sure you're prepared for any scenario because you're more than likely going to see a lot of curveballs thrown your way, and this is going to be a very difficult market this year, and it's not a market that you're used to seeing if you just started trading at the end of the crash in 2020. So watch these very critical levels and pay attention to the price action because at this point in the game, price action is all you need to watch. Price action cannot lie to you, and price action is clearly slicing through support levels, and we're clearly seeing this market going into a downtrend. Jumping over to the NASDAQ 100 triple Qs, you can see a very similar story as SPY going down 1.3% and slicing through more support. We're starting to push down on that gap below and that gap will fully close when we get down to 360. So it's more than likely at this point that that gap is fully going to close and we do have a support level right around 359. If we break that support level, watch out below because we're coming to 356 and then 352. Just like I said with SPY, there's a great chance from these levels that we're getting too oversold and the selling is overdone and we're due for a very strong relief rally. Now on the triple Qs, our resistance level is right around 375, so there's a possibility we get rejected and continue to trend lower and go down towards those 350s. Now if we get a bullish breakout on the triple Qs, it's going to be on a breakout back above about 389 to 390. So there is a lot of room to the upside to get bull trapped in the triple Qs, and this definitely classifies as a full-blown correction. From the highs, we're down just over 11%, and you can clearly see we have the time element going through this correction going all the way back to November of last year. I'm also going to throw on the 200 simple moving average, which is right around 365, and you can see that we did close well below that level. Typically in a bull market, you're going to see a positively sloping 200 simple moving average, and price action is going to respect that level. So the fact that we're trading below the 200 simple moving average does mean the selling is getting a little overdone. If we continue to go lower and we reject the 200 simple moving average as resistance, it's more than likely we're going through a much deeper correction that could end up in a bear market. So watch that 200 simple moving average, which we don't talk about much because we've been so far above it for the last 2 years that it really hasn't been relevant. So you now have the 200 simple moving average that's now back in play on the triple Qs, and that's going to be a very strong level right around 365. So be very patient in this market and make sure that you have a very strict trading plan, because you're also going to see later in the episode that we are starting to see a spike in the VIX, which does mean we're going to see more volatility. So just be very prepared for any scenario, and I know I say this a lot, but I'm going to say it again. You really shouldn't be messing around with options if you're not a profitable trader. If you're trading options, there's a good chance you're going to lose everything that you possibly throw at the market, and that's just not a great way to stay profitable, and you're not going to be doing this for long. So on the triple Qs, you're not getting bullish until we can get back above about 390, and there is going to be resistance at 379, 385, and right around 390, which is going to be the bullish breakout if we do break above that level. So watch these downside supports because we're clearly in a downtrend, and you're looking for a resistance breakout back above about 379 to start seeing a more bullish breakout. In the Dow Jones, we were down 0.86% today, and we did close down here at the support level right around 347. We fully closed the gap, so there's only one more gap left, which is above at 356. So to the upside, you're looking for resistance right around 350, 355, and the full gap close at 356.4, and the 50 EMA is right around 357. The bullish breakout is back above about 360, so don't get bullish until you see the Dow Jones trading above 360. In the short term, there's more than likely going to be a bounce because you can see we're well below the lower Bollinger Bands and the selling is getting overdone. If we break down below 347, you're looking for support right around 343, and below that, you're looking for support at 340 and 338. In the Russell 2000, we were down 1.81% today, and we did slice right through that support level right around 205, so it's more than likely that we're going down to close the gap at 197, and we do have a very strong support trend line right in that zone. I don't expect to see IWM trading below 196, but if it does, that would be extremely bearish price action and means we could be going much lower. So watch that very strong support level right around 196 to 197. To the upside, you're now looking for resistance at 205, 207, and 212, and your bullish breakout is not until we can get back above about 220 to 221. On the Arkk ETF, we were actually green today, going up 0.16%, but there's not much to celebrate when you're looking at a chart this bearish. Remember, Arkk is in a very strong bear market and a very strong bear trend, and it's not going to start looking bullish until price action can get back above the 90s. So you're looking for resistance at 78, 81, and 85, and the bullish breakout back above 91, and the next bullish breakout back above 99. It looks like we're going to continue to trend lower, so the next support level will be at $70, and below that, you're looking for support at 66.8. On the VIX, we were up over 7% today, and the VIX did close above 24. So just like I told you, the next stock market correction, we're going to see the VIX above 24, and we're officially here. The warning sign was when the VIX started closing back above 20, and now we have confirmation with the VIX above 24. So we are definitely in a stock market correction, and I know you didn't need me to tell you that because it's very apparent, but hopefully you were prepared and you knew when the price action was breaking down that we were going through a deeper correction. You're not getting bullish until the VIX can get back below 20, and this is clearly time to be very defensive with the VIX breaking out above 24 and closing above this level. So be very cautious in this market. It's going to be very volatile and it's going to be full of whipsaws for both bull traps and bear traps alike. On Bitcoin, we're currently down 1.55% and we're coming back down to test this critical support level at 40,600. If it breaks down, you're looking for support at 38,000, and below 38,000, you're looking for strong support at 30,000. The bullish breakout will be back above 46,000 and then breaking back out above 51,000. Don't get bullish on Bitcoin while it's trending lower and it's clearly in a very strong bear trend. On NVDA, we were down 3.66% today, and we did get confirmation that we're losing support at 253 with the second day in a row closing below that level. Remember, I told you below 253, it's going to be a quick trip down to close the gap at 233, and you're starting to see that price action. 233 should be strong support, but if that level does fail, you're looking for another quick trip to close the next gap at 210. Remember, this was a very vertical move, and there's not a lot of support at these levels, so breaking down below 253 is not something you want to ignore. If we start to see a bullish rally from here, you're looking to short at resistance and continuation of more downside, and the next bullish breakout will be back above about 276 and then breaking above the resistance trend line right around 285. There's no reason you should be bullish on NVIDIA while it's trending down towards 230 and possibly even lower. On Tesla stock, we were flat on the day, basically going absolutely nowhere, and we did close below 1,000 for the second day in a row, so it's looking more and more likely that we're going to come down to close the gap below, which is at 939. Below that, you have support at 900, and below 900, you have a gap close at 843. And to the upside, you need to see the bullish breakout back above about 1060, and then a price action breakout back above about 1109. Until you get those bullish breakouts, expect more downside and look for that gap fill at 939. On Apple stock, we were down 1.03% today, and we did get the second day in a row closing below 168. So it's looking more and more likely that we're coming down to my price targets at 162 and then below that 157. Don't get bullish on Apple until it can get back above 176 because it's clearly rolling over and going through a correction. If we bounce off of any of these support levels, that will be bullish, and the next breakout back above 168 will also start looking a lot more bullish. So back above 168, you can consider getting bullish. Otherwise, look for price targets at 162 and 157. The financial sector was down 0.64% today, and we're back to testing that support trend line, which was our resistance trend line breakout, and so far it looks like it's not holding up. We're clearly losing the bull trend, and price action is looking bearish below all the moving averages, but we still do have to respect the fact that there is a gap above that needs to be filled. The industrials were down 1.28% today and also failing to hold up above the support trend line. This could be one day of a false breakdown, so wait for confirmation, but it does look bearish with the price action breaking below all the moving averages. The healthcare sector was down 0.65% today, and you can clearly see it looks like the healthcare sector is getting ready to go that next leg lower, so look for support just below right around 129. The energy sector was down 0.92% today, but it's still looking bullish with the price action and the trend, so it's definitely looking like the strongest sector of all. So jumping back over the S&P 500, this is definitely not a market that you want to be getting overly ambitious in, and you want to make sure you have a very strict plan. You need to understand that when you get in these market conditions, you are going to get volatility in both directions, and it's not just going to be a straight line down forever. I know a lot of you think when you see a market like this that it's just going to continue to go lower, and you're going to start piling into put options, and you're going to try to short the market because you're frustrated and you want to be on the right side of the trade. It's not that simple, and expect volatility in both directions and watch these very critical support levels because you never know exactly which support level is going to end up being the bottom of the correction. So expect more downside until you get the bullish breakout, and expect to see a lot of volatility in both directions, and that's why I tell you that it's going to be a whipsaw with bear traps and bull traps alike. As you clearly saw from the intraday price action, it was looking very bullish, and then you ended up closing near the low of the day, slicing through a lot of critical support. So there's going to be a lot of traps like that, so make sure you're expecting them and they don't catch you off guard. Also, don't forget that I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. You could see here that Bank Trade Alerts beats the market every year and never has a negative year. Whether the market goes bullish from here or goes into a bear market, Bank Trade Alerts is going to make a profit. And you can see in 2008 when the market was losing money, Bank Trade Alerts made a profit, beating the market by making over 90%. With this recent market volatility in a brand new trading year, now is the best time to join Bank Trade Alerts. You can find out all of the information and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.